Hello, my YouTube friends. What an amazing and exciting week we had this week. I assume you all remember Monday and how crazy the market sell off was and how we moved around the rest of the week. So, we're going to talk about the markets. We're going to talk about real estate. It should be a really good video. Before I get into it, remember this is not financial advice. Please reach out to your financial advisor, do your own research, or whatever you do for your investment purposes. Don't listen to me. This is just for entertainment purposes and me talking about the things I do for my account. Anyway, good morning. My name is Adam Kahn, and this is Investing with Adam K. I hope you're all doing well. So what the heck happened and why did the market collapse on Monday? Like, what's the reasoning? I know the media talked a lot about the Fed cutting rates and that they didn't cut a quarter point. Maybe that was the reason. I don't think that has anything to do with it, quite honestly. I don't think that quarter point cut would have made any difference to the market this week. I really think it had more to do with the yen carry trade because what it looked to me like was a big fund blowing out of a position that was just huge, so taking the other side was nervous for the other traders and they didn't know what was going on. Now, I don't know that to be true. It's just how it looked to me. And I think you'll get what I would call a nervous V back up, meaning it doesn't go straight back up like, oh my God, that was the bargain of the lifetime, because there's always going to be fear that more is coming. But it does continue up rather quickly because there isn't that much volume coming again on the sell side right now. To be perfectly honest, I actually think the markets are going to be making new highs before the end of the year as well. Just my opinion again. I don't know. I guess we'll see as we go down the road. But I think it created a great buying opportunity. And if you want to know the things I bought, separate from the stuff that I think of as being in my safe deposit box, I actually bought a little bit of Meta. I bought SMCI, which I know I haven't talked about before, but when they had their earnings and the stock shot up and then reversed and came down, it's something that I kind of keep an eye on, and I thought, geez, that seems pretty inexpensive. So I picked up some SMCI the day after their earnings. Um, to be perfectly honest and candid, I'm down a little bit of money on it right now, but I still like the position, so I'm not getting out, and I think it's a good opportunity where it's trading. Anywhere around $500 a share seems really inexpensive for that stock. They're growing at an exponential pace that's bigger than what their price to earnings ratio is. Now, to be fair, they had a rough earnings quarter that wasn't quite what they expected, but their revenues were more than what they expected. So I'm not sure what they're spending on or where the money's being used, but they weren't able to drive that per share profit the way that the market expected. Originally, the stock shot up almost 100 points, and then it started to reverse. And what I find from previous experiences, it tends to be like a rubber band, and when it goes up that much, it goes down that much, but it's usually a little too far on the other side, so I kept buying on the way down little by little. I also bought some Google and some Amazon and some CrowdStrike. You all know, I think, that Google and Amazon are two of my favorite companies. I own them in the safe deposit box. I think of what I just purchased as kind of like on the side, separate from that, and hoping to be able to get a trade out of it. I have a little bit of a lead, but we'll see where it goes. But I think these are great companies. I see a lot of these gloom and doom videos that I know you guys know I talk about, and I am so not gloom and doom. When I look at like the housing market, to me it seems to be working itself out perfectly. Certain locations across the country are getting a lot more inventory, whether that's for specific reasons to the region. Like Florida's having some HOA issues, and they're also having issues with how much the insurance prices went up and other things. So they're having a huge amount of inventory come to the market, which is driving prices lower. But I think that's also what's going to allow the Fed to be able to cut rates, support the housing market. I don't expect to see a huge collapse like we had in 2008 and 2009. I expect to see it slowly dwindle and catch itself around where it is now, creating opportunity for people to be able to get in the markets when it was getting out of control in some of those places. At the same time, if you look in the area where I live here in Las Vegas, we have not had the inventory surge. I also don't expect us to have the inventory surge. We have too many people moving here from other places because they're finally realizing what a great place it is to be. I don't mean it the wrong way. I'm not trying to overstate it. I'm really saying it because it was something that I saw about Las Vegas when I moved here in 2005. The reason I picked Las Vegas is I thought of it as one of those top destination places. Who hasn't heard of Las Vegas? It's a great city, it's a great place, other than it's hot and it's the desert. Now, after being here 19 years, you really do get used to it. The comment of it's a dry heat is really true. I would take 100 degrees in Vegas before I want to be 80 degrees and humid in New York. It feels much worse to me with that humidity. Now, it's gotten more expensive, but people are finally driving here, and everybody knows Las Vegas. I think it's going to continue. We also have F1 now, the sports teams that we've added. Hollywood Studios is coming. I've talked about it in other videos, so I don't want to talk about it too much. But I don't see us having a huge influx of inventory for all of those reasons, and we still have demand on the sideline. So what I really think when you get to those areas like Las Vegas, and I would say it's probably the same in Hawaii, but I haven't looked, where there's still demand and people are moving there, as the interest rates start to come down, you'll probably see the prices really firm up. I don't know that it'll go higher. Maybe it will, and it should if the rates come down a lot. But what I really envision with the bond market and mortgage rates and everything else is you're not going to see mortgages come down a whole ton. What I think happens as the Fed cuts, you'll see the short end of the yield correct a good amount. The returns on 3-month treasuries, 6 months, 2-year treasuries has been elevated because of the overnight lending rate by the Fed. As the Fed cuts, I expect that to come down rather quickly. And as we saw this week, it's already begun to do that. It's corrected a bit because I think it overshot, kind of like how the stock market did, but it moved rather quickly. And I think that'll continue. The long end of the curve did not correct as quickly. And I think that'll play out through the cycle of Fed cutting. Now, let me explain what that means. And I'll try to, I'll even try to use my hands and do funny little. I think the yield is going to uninvert and it will look more like a normal yield curve, which means you're going to have it start here. And as you go further out to later dated bonds, you get higher yield return if you're buying bonds. Shorter bonds will pay lower. Now the markets always freak out that when a yield has been inverted for a long amount at all, that it's the sign of a recession in the future. Like anything else, when everybody's prepared for something and then it happens again and it's touted and reported on and everything else, it tends not to happen this time. And that's what I think is going to happen. I think when the yield really uninverts and starts to go back to normal, the traders, the people who've been listening to it, everybody who's just assuming we're going to have some huge recession is going to get over nervous and sell equities and sell other things into it with this thing that happens 100% of the time. The fact that it's been so publicized tells me that the Fed's done a great job and we're probably not going to have that huge recession after it uninverts. I think what you'll see is the short end come down, the long end move slower, mortgage rates come down way less than people think, but the fact that it'll be in the news all the time with the Fed cut rates, the Fed cut rates, the Fed cut rates, you'll see people flocking to the housing market because they assume rates are better, and that'll help support the market from falling. I just don't see any big collapse coming. You still have people in interest rates that are in the threes, fours, and even the high twos that are also not really going to move no matter what the rates come down to, because I don't see them getting back to those lows unless we have some big calamity. We've seen unemployment tick up, and at this point, inflation is not going up at the pace it was before. There's really no reason for the Fed to just hold it artificially high just for fun. Like, there really is no reason. I think they recognize it. I think that's why they indicated that they're going to be probably cutting in the future. They're also in no hurry because economy's still going. Places are still busy. It's a little tale of two cities where some things are doing well and some things are not. But the overall economy, when you look at GDP and everything else, seems to be chugging along just fine. And quite honestly, when I go somewhere, places still seem busy and people are still spending. Of course, nobody likes that it's more expensive. I get sticker shock as well. But keep in mind, lower inflation again does not mean deflation. I don't think we're going to see the prices from 2019 again anytime soon. I do think we'll see more sales at the grocery store and buy two, get two free, or whatever it is that the manufacturers think will help move their products better. But I also don't think we're going to see the prices revert to where they were. Unfortunately, I'd like it too. But really, if they did, I think it would create too much demand and put us right back to where we are. Now, depending on what you're looking to invest in and what you're looking at and what your goals are, I still see tons of opportunities in the equities market. UPS closed the week, if I saw right, around $125 a share, paying over a 5% dividend. I think that's a great opportunity. Nike is still in the low 70s, which I also think is a great opportunity. And Starbucks, which I hated what the CEO said, and you all know that, still looks relatively inexpensive. In my mind, Meta is still the best of the best. They crush their earnings. I don't really see what could cause that to slow down in the next quarter either. People love to hate Meta. They seem to love to hate Zuckerberg. And when I look at forward prices, they're only trading 20, maybe 21 times next year's earnings. I think that's super inexpensive for a company like Meta. The one I have the most trouble with is Costco because I really want to own more of it, but it's so overpriced in my mind in terms of price to earnings that it's very hard to buy it here. But I also believe in owning the best companies, so I wouldn't want to talk somebody out of owning it. And what I love about Costco is no matter if the economy slows down or accelerates, they seem to be able to drive business for different reasons. If the economy goes through a rough patch, they get a lot of new members because people start buying in bulk to try to save money and they have really good prices. If the economy's strong and does better, well, they just have the natural flow of new customers because they have a good product. The other thing is they really don't have that many units or stores, whatever you'd like to call them, across the world. It's a very small number when I looked at it, which means they have a lot of room to grow additional stores to build revenue that way. I think they have great potential to continue to grow over a long time. I just think they're trading around 40 times or 50 times forward earnings. And that just seems really pricey for something in the grocery, field. Yeah, it's still a great company. It's one of the ones that like I said, I wish I had more. I see great opportunity in McDonald's. I think those $5 value meals are going to work if they aren't already. I think the YouTubers making fun of it are just making fun of McDonald's, talking about how expensive it got. But McDonald's has been around an awfully long time, and they've been through these ups and downs and know how to mitigate pretty much any economy. It's just built into their brand. So while people are complaining about how expensive they've gotten and then making fun of the $5 specials, my guess is that's what's worked in the past. It'll work again now, and they'll be able to continue to drive sales. Maybe it'll lower their margins because those don't make as some of their other products. But who really cares as long as they're pushing their sales, they're growing their revenues, and keeping their customer base? Boeing, which I've talked about a whole bunch, finally started with a new CEO. They're getting past a lot of the troubles that were in the news. I think they finally flushed out those last people holding on, and it's another one I think is going to continue to drift higher, and finally breach out. Now, remember when I talk about Boeing, that's just not one of those companies I want to own forever. I just think it's a good value where it's trading right now. And then, of course, which I've talked about a lot, Pfizer and Bristol Myers, which both pay a 5% dividend or higher. And I think as the Fed starts to cut rates, you're going to see the companies that are paying dividends like that drift higher simply because I don't find it realistic that you're going to be getting a 5% dividend as long as the company has safe earnings and can pay that dividend easily when the Fed starts cutting rates and you're no longer getting 5% in your CDs and treasuries. When those start to drop to 3% or possibly even 2% over the next few years, I would have to imagine that the prices on a company like Pfizer or Bristol Myers will drift higher so that the yield on the dividend in those stocks are closer to 3%, maybe even 4%. But I think getting above a 5% dividend in a company that has enough cash flow to be able to afford to pay those dividends rather easily and still have money to invest in their company probably isn't something that's easy to find. And then the other thing that I picked up was CrowdStrike, which I'll use the bad news on a great company. Now, I'm an investor in Palo Alto Networks, and I'm not sure if they're exact competitors or if they're both just in cybersecurity but in different spaces of the same industry. But I think that they're the best two names in the industry, and I wasn't really looking to pick up CrowdStrike. But when I saw the stock collapse, and then on Monday it even traded below $200 a share, I saw it as a great opportunity to get in a great company. I'm not sure if this will just turn into one of those companies I hold for the long run, because really I think they're a good company that you want to own. And I, again, saw this catastrophe as a great opportunity to pick it up on the cheap. Now, maybe it bounces around at the lows for a while. Maybe it has another scare. Maybe the lawsuit between them and Delta become a bigger issue than I think it will. But I just saw that as an oversold, over dramatic issue that I don't see it having some real push, and I don't see them going out of business or collapsing or anything like that. Like anything else in time, I just think they get past it and you're getting a discounted stock in the meantime. And then a little bit on the personal side. I don't have as much energy in the video. I apologize. And for those of you who've made it this far, I just want to talk a little that my dog Winston, who you used to see in the background from time to time, he passed away this past week. I'm pretty upset. We had him since he's actually older than my son. Um, we got him at the end of 2008 or early 2009 as a puppy. He's been with us for a long, long time. And I'm gonna miss that guy. He was a good dog, and you know, even now when I come home, it's like I expect to see him when we open the door. So it's quite a bummer. For those of you who have pets, especially if you have dogs, they become like your family members. They're always so happy, like they're just glad to be around and see you, and you know, kind of a bummer. So I apologize if I had lack of energy this week or if the video was a little bit off, but for sure, shout out and a rest in peace to Winston. A really good dog and a good friend that I'm going to miss for a long time. And before I forget, if you haven't already, hit that thumbs up button. Don't forget to subscribe if you haven't. Make some comments. Let me know what you guys thought of the markets this week. Have a great weekend.